Good morning, traders. Another day in the markets. It's the first of the month, November 1st. You guys can have a good fresh start. Um, fresh start to the month. And let's try to make it a very profitable one. I took a break. I was actually out on an excursion, had a lot of things to take care of. So I've been pretty much out most of the week. The last time I traded was Friday, but I am back today. I should be able to round out the week here and go on into next week. So, as I see it, as of right now, it's not many things to look at right now. Um, it's going to be one of those, at the moment, looks like one of those scanner type moments, unless something pops up out of nowhere. But let me take a look here. The overall market is basically, from as I can see it, this quickly, I can see that it basically, just my quick overview is that it's in a rebound mode again, as I stated it, almost like it was in the other video I made. It's basically just rebounding. So you're gonna see some stocks that show a gap in the minute chart or the hourly chart, but if you look at the daily, you'll see that it's just basically bouncing, just recovering from the falls that it made. So with rebound plays, there's money to be made, but you just have to keep an eye on them because they don't move the same as true gap and go setups. Whereas, as you know, a stock is already trending up and then it gaps up as on top of that, or if it was going sideways and gaps up, those are more reliable than stock that went on a major downtrend and then just has a bounce up. So just keep that in mind. Um, let's see. Just gonna take a look at overall market, see what is going on here as a whole. Now, for those that are looking for a watch list, and maybe you don't have trade ideas or you're just looking for alternatives, for those who have SureTrader as their broker, and I'm quite sure many other brokers offer a similar thing, but I'm gonna show you with SureTrader. They have a pretty decent watch list here. Let me show you. It's the top list. It's called a top list. So you can basically see what's gapping up and what's going up, and then also what's very active. I sometimes I do utilize this because it does come in handy. So I'll leave that there for just a second so you guys can take a look at it. Sorry about that. So you can take a look. So yeah, this is one way to try to keep up with stocks that are moving. If you don't have trade ideas or you don't have any paid subscriptions or you just want a different way to see stocks that are active, I utilize this sometimes. But as you can see, SLL, I usually look in the gaining section. The section of the gains, LST gains, and then the Nasdaq gains. You can look at any one of these if you want. Um, Active sometimes is pretty good. It just letting some stocks have a high volume this morning, and it's trading pretty liquid. So those are stocks you want to keep an eye on as well. But right now I'm just basically gonna go down this gains list here and see what's kind of moving. I've been noticing there is some action, but it's at a lower price levels, down in the dollars and the 50 cents. I don't personally trade those stocks. I don't trade anything under $3. Because with SureTrader, you have to trade if you want to use margin, which is this buying power here. If you want to use their buying power, which is 6 times leverage of what your equity is. So if you got $1,000, you have $6,000 worth of buying power. Anyway, if you want to use that, the stock must um, be at least $3 in price. Um, $3 and higher, they're fine with it. It can go all the way up to whatever, $100, $500. They don't care as long as it starts at $3. Anything under $3, you're on your own. You use your own equity. You're gonna use. So I would, in this case, I would just be using $600 if I wanted to trade this stock, which I could get about 400 shares, something like that. If I want to use my own buying power. But I usually like to try to use play stocks that I can have more leverage on, obviously, because the more leverage, the more profit potential. Also on the flip side of that is the larger your losses could be, the quicker and faster your losses could be. But that's why you have to manage your risk. That's why you have to have a plan before you get in any trade. Have a plan. So anyhow, I've been noticing a couple of these dollar stocks moving around. SLS, BRX, if I'm not mistaken, that's like $1. You see that? It's a couple gappers this morning. Um, let's see. And with the top list, the stuff actually does um, update pretty regularly. So it's not like a one and done where you open it and this is all you see and it doesn't move. No, it actually moves as things are moving up or down. So it's pretty accurate as far as movement. It's a little more accurate during the after the bell, obviously, because there's more action going on. But it's definitely a good tool for those that may have overlooked it, who have SureTrader and just have overlooked this option. But it's definitely one to keep in mind. Let me see. Yeah, as you can see, a couple of these dollar stocks gapping up. Me personally, I'm not gonna play any of them, but I'll keep them on watch for you guys. And then also with the dollar stocks, you got to keep in mind that, especially at like a dollar, especially when the stock is like say 90 cent, and then it jumps over the dollar hurdle. Those types of stocks, 9 times out of 10, it's gonna fight very hard for every cent. Like for from $1 to $1.01, from $1.01 to $1.03, to $1.03 to $1.05, and then back down to $1.02, and you see what I'm saying. So that's another reason I don't like to play those stocks. So even with a high equity, I still don't play those because they, first of all, they fight too hard most of the time, 9 times out of 10, to get from 1 cent to the next. You don't want to play those types of stocks. If you're trying to really accumulate money, you're trying to accumulate it fast, man. If you want a slow buck, you want to be all day just to make 5 cent, then go for it. But the whole goal, should be in this trading thing is to, try to make as much profit as you can in the quickest amount of time and most efficient way as possible. Or because time is money, especially when you have a small account. When you have a large account, 100,000 or better, then you can afford, you can stand, 5 cents here and there. You can stand that. If you can get, because every 1,000 shares you can get in the stock, every cent is $10. So if you get 1,000 shares of whatever, and it goes up 10 cents, that's a quick $100. You can stand that. Or if you have $10,000, then then it goes up from there. That means it's $100 per cent that goes up or down. So just keep that in mind. Not 1,000, not $10,000, but 10,000 shares. I'm sorry. If you have 10,000 shares of a stock, you can do the math on as far as how much money that is. Say you're getting this stock here, or I'm just gonna make it easier. $10 stock. So in order to get 10,000 shares of a $10 stock, you just do the math on it, and most brokerages will add it up for you when you just put in your. I know with Thinkorswim, if you can put in a dollar amount when you're buying a stock, you can just put in say $1,000, and it'll automatically figure out the shares for you. and it'll actually execute it for you without you having to do this math. But anyway, back to it. So say you buy 10,000 shares of a $10 stock. So that basically means you got $100,000 to play within it. So now if that $10 stock goes from $10 to $10.10, you made $1,000. So that's why I say if you're playing with a lot more money, um, if you're playing with a lot more money, then you can afford to have those small moves, small little, little 10 cent, 5 cent moves. A 5 cent move on a 10,000 share position is, that's a good amount of change right there, man. Um, uh, so that's, that'll be like $5,000. 5 cent. Um, Let me see here. Sorry, it'd be like $500. If you get 10,000 shares, I don't want to get the math wrong. If you get 10,000 shares, you know, basically every move is $100. Every cent is $100. So, 5 cents is $500. Just 5 cents. And that's very realistic. So, anywho, um, if you do that, if you have that kind of money to play with, then yes, go ahead and take these little dollars to $1.05, and you're good. But if you're, starting with a small account, you need stocks that'll move. I would say 20 cent or better, or has the potential to move 20 cent or better. Sometimes things don't go the way you plan it, but it should at least have that potential. You should see, in its history that it has a history of moving or having large ranges. You want a stock that has a large range, um, to be able to, get the most bang for your buck. So anyhow, I'm gonna keep looking, seeing what else is going on here. As I said, like as of right now, it's kind of it's on the slower side. To be honest, my opinion is actually this same scenario happened around the primary elections. My opinion is because of the elections coming up here, the markets are going to be a little bit slow until the picks come in. And then at that point, watch that next Monday, that the next week, you're gonna see a lot of volatility. One way or the other. I'm not getting into politics here, but if Republicans take over the House or whatever, the Democratic traders are gonna be in disarray, and vice versa. If the Democrats take over the House, the Republicans traders will be in disarray. And so anyway, you should see a lot of volatility one way or the other. So that's good news for traders, whatever the outcome of the election, the midterms here. That's my opinion is why the market is slow right now. It's because everybody's pretty much waiting to see who's going to be in office, with their belief systems and what they're going to do for our future. So they're kind of in limbo. I think that's my opinion. It's just totally opinion, speculation. It's not fact, but that's my speculation as to why the markets are kind of slow right now. Everybody's just holding their breath now. Um, After next week, that's when stuff hit the fan. Stuff hits the fan. All right. So, but nevertheless, there's always something to play. There's always a stock to play. It may not move as much as you want. It's not going to be those parabolic movers all the time, but there's always money to be made in the market. That's one thing I learned over time. But you obviously have to develop strategies. You have to develop a way to take advantage of any and all opportunities, meaning slow markets, quick markets, bear markets, bull markets. You have to be able to. You have to. It takes time, man, to get strategies that will take advantage of each and every one of those scenarios or any of those scenarios. Um, you can be long bias or you can be short bias. My honest opinion is it's good to learn both. I'll tell you no lie. It's good to learn both sides of the market. There's many benefits to that. One being, obviously you could take advantage of opportunities um, either way. Whether the market is in a bear market or the market is in a bull market. You're setting yourself up for opportunity, no matter what. You know, if you're one side biased, that's fine as well. But then if a market is, going the other way, then what your bias is, then you might not find any trades. You might not find anything that meets your strategies because everything is going the opposite way. Number two, it's good for psychological reasons. If you're even if you don't want to do short, or say if you don't want to do long, or you don't want to just do short, say you're long bias, it's still good to know about the short side because then you'll know where shorters are likely to short a stock. So you'll know from the long side where to stay away from, and also you'll know where a short squeeze is happening. So therefore, you have a better idea of what's, over a big picture of all angles of the market to help your trading, to give your trading the edge, because you know your enemy, you know your opponent. I don't like to call them enemies, so to speak, but you know your opponent, because this is a game. It's basically like a game that we pitting each other against each other. It's a what is it called? Zero sum game. So that means, when somebody wins, somebody somewhere loses, and vice versa. When somebody loses, somebody somewhere has won or made money. So that, my friend, is what you call competition. So anyhow, you have to know the competition, and in this case, I'm going to pit longs against shorts. So you have to know if you're on the long side, you got to know where the shorts are playing, how they're playing, where they're playing, you know, where they're likely to get in. And then if you're on the short side, you got to know where a lot of people, are looking for these certain support levels and gonna jump in long. You just gotta it's good to know both sides of the market. It's good to know both sides of the market. That's bottom line. But I'm not gonna talk to you guys too much today. But I will say I'm gonna just leave the scanner up for. I'm not gonna leave it up to 8:30 today because it's kind of slow. Might just leave it up to about 8:10, 8:15 a.m. Eastern time here. Um, but yeah, we'll continue to look for some plays here. But as it stands, market is a little bit on the slower side in the small cap market. I haven't even checking in the large cap. Sometimes I've noticed as well over the long haul. I've noticed sometimes when the large caps are very active and volatile, that's where the money has flown. The money has moved to the large caps, and then usually in that case, the smalls don't move as much. I know some think that when you see the overall market moving higher, and you see all the large stocks making big moves, you expect that out of the smaller ones. But from my experience, from my years of experience, usually they play. It's like an ebb and flow. So if the large caps are kind of slow, I think the smart money comes. They're just looking for opportunities. So then they come down to the small caps trying to look for opportunities. And that's when you normally see the smalls start to go to moving when the large is kind of slow. And then vice versa, when the large caps are moving very actively, the smaller cap stocks kind of slow down. I don't know if you guys have noticed that, but I've noticed it over a long period of time. But that's neither here nor there. It's always going to be opportunities no matter what all of these theories and all this kind of stuff is. You know what I mean? There's always going to be opportunities. So don't take that what I said as gospel, but just know that's my opinion on it, my observation. But DCIX kind of popping up here. This is the shipping sector. That sector gets hot every year around this time. It's like clockwork actually. Around the October November ish time for the last 3 years, about 3 years here, 2 to 3 years. This is what they do, but I think they're overplayed, man. They're overstated. They're welcome. A lot of traders are fully aware of the movements of DCIX, TOPS, DRYs, DRYS, and all of those similar stocks, and they're just beaten down. So I personally won't play any of them. I don't care how it moves. I just won't play them. Just not my thing. So, but it's opportunity there. But I personally wouldn't play them. Um, let's see. CRON. Recent IP. Well, recent marijuana stock. It's not doing too hot right now as it stands. And also, a lot of these are higher float stocks. The stocks that are pretty much moving, that's over $3. All of them are like 300 million shares floats, 100 million share floats. I try to stay away from those, but I honestly will play them. It depends on the movement to me. I look at the movement of the stock. Um, if the stock is moving freely, and if it's some stocks actually move. Hold on a second here. Some stocks actually, even with higher floats, some of them move just like a lower float stock. I've seen, and then also I've seen the opposite, where some supposedly lower float stock, maybe like supposed to be like 20 million share float, they move like 200 million share float because they move very sideways. They don't move much. So you just look at you look at the movement of the stock. I mean, yeah, for the most part, yeah, if it has a high float, it's not gonna move much. It's gonna move. I'll give you an example. This one here. Now, if you look at the you look at the chart, you see a pretty big little range here. But if you look at the price, what is it like? It jumped from 590 or a little over 590, 592 to 608. Like up 90, barely 20 cent. Not even 20 cents. So you got to keep this stuff in mind, and when you're trading these types of stocks, you need something with a range. Like you need somewhere to jump from 550 to 650 or 550 to 630. Like an 80 cent range, something like that. That's where you make your money. Don't I wouldn't waste. I wasted a lot of time. Trying a lot of these, just trying anything, any stock that looks like it was going, moving one way or the other. I was jumping in. So learn from me. Learn from my mistakes. Try to don't you can make them. Sometimes it's good to make your own mistakes. Experience is always the best teacher. But if you can avoid and save some time, man, and just listen to some people who've been there, it'll save you so much in the long run. It'll save you so much. Anyway, I'm gonna let this thing go in like 2 more minutes. I'm not seeing anything really um, exciting here. If I make a trade in this next 2 minutes, which I doubt it, you'll see it live. Otherwise, if I make a trade the day after the bell or a little later on, then I will do a recap tomorrow. Also, Sure Trader, usually around the second or the third of the month, they're gonna take out their $104 platform fee. So um, just keep in mind that this equity, it'll probably you're gonna see it drop from wherever I'm at before they take it. I may get up. Hopefully, I'm up to like 700 before they take it, or 800. But anyway, they're gonna take out that 104, so you're gonna see it minus 104 either tomorrow or Monday. Definitely Monday, it'll be down $104 from whatever my equity is. So don't think that I've had a big loss when you see that. That's just gonna be Sure Trader taking out their monthly fee. It's the first of the month, so it's $104 for the platform, which is the platform you see I'm using here, and for the market depth, which is the level 2. Now you can have it. The price goes down a little bit if you don't have the market depth, so you'll basically just have the first lines here. If you don't have the level 2 market depth, you would be able to see the 530 and 531, but you wouldn't be able to see the rest of these down here and the rest of these down here. And that's like $20 cheaper, so you'll be paying like 80 something dollars a month. So it's ways to get your, to have that fee reduced. But obviously, the better edge you can have in this market, the better. The more edge you can have in this market. But anyway, like I said, I will be doing another one tomorrow. I may be here. I may have something to take care of tomorrow. It's not set in stone, but at this point, I think I'm gonna be able to make it tomorrow. So I'll be in here same time tomorrow, 7:45 a.m. Eastern time. Eastern time. Oh man, you guys on the West Coast, bro. I feel for you, bros. Because it'll be seven. Our market open here on the East Coast is 9:30 a.m. Obviously, everybody knows that. So that means it's 6:30 over in like California and places like that. So you guys have to really get up. You have to be up. So give you guys major props for that. Major props. But hey, you do what you gotta do to get to that money, man. That's the bottom line. You do what you gotta do. But yeah, anyhow, I'm up on here 7:45 every market day. So that in you guys' case in California, that's 4:45 a.m. But hey, you'll catch me when you can. But anyhow, I'm gonna if I could leave you guys with anything, it's an old quote that I got from a fellow trader. Um, you'd rather be outside of a trade wishing that you're in a trade rather than being in the trade and wishing you're outside of the trade. Always keep that in mind. You'd rather be outside of a trade. So sometimes, basically, what it's saying is just sometimes you see opportunity, you just have to let them go if you didn't catch your your entry point. You'd rather be outside of it, looking and like, okay, well, I wish I wasn't, but you're not losing any money because you're just looking at it, rather than impulsively jumping in something and then it goes against you. You're down, you know, 15, 20 cents. Now you're wishing you were out. So that's if I could leave you guys with anything, that will be it. All right. So you guys have a happy trade. I'm gonna shut it down.